So if we go back to meme coins 9 months ago, you could make some money. They would go from a low market cap and then maybe would they go to $1 billion. And people had a real chance. And then more and more issuance came and more kind of insiders were part of it. And it just became this endless slew of new issuance, of which the people would get out after day 5 and then day 3 and then day 2 and then hour 5 and then hour 2 and then hour 1 and then 30 seconds after launch. So they've got faster and faster and faster and faster and more of them, that what we've done is erode all the opportunity out of the whole thing. And maybe that's the good thing. Maybe we've actually finally reached the bottom of this. And some memes will survive, because memes survive all of humanity. So Doge has lasted since 2013.
Crypto is in chaos, and the meme coin space is at the center of it all. What was once a gold mine for early investors quickly turned into a circus. The first wave of meme coins, with small market caps, surged to astronomical valuations, some hitting $1 billion in record time. But then the floodgates opened. New coins dropped almost daily, and institutional players started muscling in. The result? A market saturated with endless tokens and rising pump-and-dump scams. Crypto, especially meme coins, has turned into a playground for fast money schemes, where coins are bought and dumped within hours, leaving genuine investors scrambling for scraps. Now, real investment opportunities are harder to find as the market becomes a labyrinth of new, untested tokens. However, this mess might just be the necessary step toward a reset. Meme coins are like cockroaches. They won't die. Dogecoin, for example, has been around since 2013, and it's still kicking. Raoul sat down with Barron to discuss why crypto's market may stay in this volatile state until 2026, because right now, it's too chaotic to stabilize. Let's watch clips from the interview for further insights into Raoul's conversation. To stay updated on the latest financial and cryptocurrency content, like this video, subscribe to our channel, and turn on post notifications. Thanks for joining us again. Enjoy the video. Today's video is sponsored by EMCD, a powerful yet user-friendly platform designed to make buying, storing, and earning from crypto as simple as possible. Whether you're a beginner or an experienced investor, EMCD offers an intuitive interface and an all-in-one ecosystem that lets you manage your crypto effortlessly. With over 300,000 users across 20-plus countries, EMCD has built a strong reputation, offering a seamless experience with a top-rated peer-to-peer exchange, a secure crypto wallet, and one of the top 10 mining pools in the world. One of the standout features of EMCD is Coinhold, a high-yield crypto savings account that allows you to earn up to 14% annually just by holding your cryptocurrency. If you want your crypto to work for you, I would strongly recommend storing your coins in the Coinhold crypto savings account. Coinhold offers some of the most attractive conditions on the market: 14% on stablecoins like USDT and USDC, and up to 8% on other cryptocurrencies. And if you sign up today using the promo code SAVVY25, you'll get an exclusive 3% plus on stablecoins and 1% plus on other cryptos for the first 90 days. That means 17% APY on USDT and USDC and 9% on other crypto holdings, an opportunity that's hard to beat. Another huge advantage of Coinhold is its daily payouts, so you're not waiting weeks or months to see your earnings grow. Your rewards accumulate every single day, making it one of the best passive income options in the crypto space. But EMCD isn't just about earning, it's a full-fledged crypto ecosystem. You can store your assets securely in a multi-asset crypto wallet, trade on a zero-fee peer-to-peer exchange, and even participate in one of the largest mining pools globally. Everything you need for daily crypto operations is in one place, eliminating the need to juggle multiple platforms. If you want to learn more about how EMCD can help you grow your crypto holdings, check out the video we've already made on the topic, link in the description. Otherwise, don't wait. Start earning passively today by signing up through the links below and putting your crypto to work with EMCD's Coinhold.
The issue being is that everybody's getting destroyed by this. So if we go back to meme coins 9 months ago, you could make some money. They would go from a low market cap and then maybe would they go to $1 billion. and people had a real chance. And then more and more issuance came, and more kind of insiders were part of it. And it just became this endless slew of new issuance, of which the people would get out after day 5, and then day 3, and then day 2, and then hour 5, and then hour 2, and then hour 1, and then 30 seconds after launch. So they've got faster and faster and faster and faster, and more and more of them, that what we've done is erode all the opportunity out of the whole thing. And maybe that's the good thing. Maybe we've actually finally reached the bottom of this. And some memes will survive, because memes survive all of humanity. So Doge has lasted since 2013. Right. So some stuff will survive, but I think what we've done is hyperscaled this cycle, destroyed all of the excess gains that were possible, and that's hopefully the end of a lot of this. And we can then have a cleaner market. I think the difficult thing is most of these people are not us. So these are younger people with no chance of buying a property, who are seeing nothing but sort of a bleak financial future for themselves. So it's become this kind of financial nihilism, or to put it in a more positive term, it's a more speculative economy, because there are opportunities there and they need the opportunities to leverage. So they will always keep looking for the 50x, even though however often we tell them, listen, there's no such thing as consistent 50x returns. Really, if you're owning Bitcoin, Ethereum, Solana, Sui, whatever, you'll do fine. But that's not good enough for them. To have another 5 or 10x from there is not good enough for them. So they are looking for something. But I think you're right. The sense is that they will stop looking under this particular pile. Yes, they might find memes, whether it's Pepe or whether it's Doge or whatever, that survives and does well. But I'm not entirely convinced that meme coins will be the great attraction any longer. So how we create network value is either by number of active users, or it's also the total value transacted on a particular chain. That combination explains the value of these networks. So Bitcoin has big size transactions and a lot of users, which is why it's the most valuable. ETH has smaller size but lots of users, and it all flows from that. So real world assets outside of stablecoins tend to be larger single transactions. If you're going to take a slice of a bond, or credit or something like that, it tends to be you stick in $100 million because you're a financial institution, and you don't do any more than that. So it's a high value, but only one or a few nodes in the network are using it. So yes, they're good, but they're not everything. So they add value. Gaming, on the other hand, much smaller values, gigantic volume size. So there is a balance between all of this. Now, over time, we will see the entire financial system go onto blockchain rails anyway. So it's not just the tokenization of real world assets, more so the hyper efficiency of putting equities, all bonds, everything on chain as an instant settlement system, proof of ownership, custody. You get rid of so many middlemen. So that's coming, and those markets are trillions upon trillions of dollars. So yeah, it is important. Gaming's important from another perspective, because that's one of the large communities of Web 2, social media being one, gaming being another, music being another, sports being another, that will eventually migrate across to this world. And all of those come with like 1 billion users plus. I mean, a big game can have 1 billion users. A big pop star has 1 billion fans. A big sports team has 1 billion fans. So these are very big things.
So if you're looking at RWAs just in general, especially around the stance of Solana and Avalanche, are you picking one of those to be maybe one of the market leaders?
No, I mean, I know John Woo from Avalanche well. John's come out of the traditional finance space, the hedge fund space, like myself. They're very well positioned in real world assets. They've been working on this for a long time. But we've already seen Solana do some. ETH will obviously do a lot because it's kind of the proven one here. We know that Sui has been working with Franklin Templeton. So I think it'll get spread across. I actually think the real world asset majority will be in the EVM system, just because you don't get fired for it. You're not taking a risk. It's like having Microsoft go into any bank, any asset management firm. It's all Microsoft and not Apple. And the reason being, that's the easy decision to make. So Avalanche, I think, will continue to do this. They've got the other side of it as well, because they've got gaming as well. So they had the off the grid game, which is huge, which I think is very important. So my view is Ethereum have overbuilt block space for current demand. So we've had layer 2s, we've cheapened the layer 1, so it's not accruing so much. Now, let's go to a forward for a world where 3 billion people are using blockchain and EVM's capturing a large share, right? It's now scaling massively because of layer 2s.
Yeah.
It's then generating enough income on the layer 1 that you're generating revenues across. We're just not there yet. So we can argue all day about the technicalities of what Vitalik and the Ethereum Foundation are doing. The reality is they're building something that's going to be massively scalable in due course, and differently so than some of the others like Solana. So it feels that ETH is struggling, it's non-performant, it's not great. My guess is by the time the financial system steps in and starts building, and they start using layer 2s to build, and we start accruing value in the layer 1s, using these reduced gas fees but much higher volumes because they're coming through from the layer 2s, I think it'll all work out fine.
Raoul Pal remarked that the current Bitcoin market has instilled a sense of financial apathy in younger investors. This has resulted in a more speculative economy, with investors seeking big returns regardless of the dangers. Raoul Pal pointed out that network value is created by active users, and the overall value is transferred on a chain. He reminded me that Bitcoin has a high value because of its enormous transactions and user base, whereas Ethereum has fewer transactions but a larger user base. Raoul Pal believes that the financial system will shift to blockchain, resulting in hyper-efficiency and fast settlement. He also expects gaming communities to attract a large user base to blockchain technology, noting that Ethereum, despite its difficulties, is developing a scalable platform for the future. Let's go back to the interview and watch more clips to gain insights from Raoul Pal.
AI agents is a little bit maybe contrarian. How would you position that if you look at it on ETH? Would you still say a little less opportunity or a lot opportunity in the way of Ethereum?
So in the short term, what has been launched is basically testing of ideas and really ChatGPT wrappers plus rewrapped Telegram bots. Not that interesting. But obviously, Brian Armstrong was out on the tape again talking about this today, agents are going to use crypto payment rails. You need to pay an agent. If you think of an agent like somebody on Fiverr you go to make a deck for you or whatever it is, right? You have to pay them for their time. And including their time is their profit margin for their light and rent and living and stuff like that. With agents, you're going to pay for the compute and you're going to pay for the electricity.
Yeah.
And then maybe a profit margin if it's a private agent. So that really can only get done in crypto rails, because if you look at the speed of how ChatGPT does these things or any of these AIs, it's instantaneously. They'll get that, we'll see it coming out soon where we will be using 10, 20, 30 different agents to do a simple task like booking an airline ticket, right? That actually has a lot of stops and booking your Uber to the airport, all of that stuff. So there'll be payments for all of this. I think EVM will do fine for payments on this stuff. On a layer 2 or something, because it needs to be performant, it needs to be fast, cheap. So yes, look, the longer term, this is a very, very, very big deal. There's only 8 billion humans, there's infinite AIs, and infinite AIs using infinite blockchain wallets equals, infinite market cap of crypto over time.
What would you suggest if you had Elon's ear right now? What would you say? Hey, let's do a variety of blockchains for different, scenarios. How would you play it?
Probably a variety of blockchains, just because it's net good for the United States. You don't want to be a maximalist at government level because it's too important. But certainly, things that need to be truthy can get truthier very quickly. Economic data is one, right? There's always the argument, and has been for as long as I've been in markets, economic data is manipulated. Well, once you put it on chain, it can't be. It's provably so. So we can do it with that. We can do it with spending. We can do it with budgets. All of this can go on blockchain. Now, let's see how brave they actually get versus what they say. But I think economic data might be. But there again, Trump might say, that I actually just want to massage the data myself. So people say they want truth, but it's not always clear that they do. Yes, I think it's a big deal for this cycle, because when I speak to institutions, both from the investment side or those that want to build on blockchain rails, this clarity is desperately needed. Desperately needed. Now, they kind of are moving forwards because they know it will be pretty liberal now going forwards in how we can use this technology, but it's still not easy enough for corporations to do this with ease. So look, it's a very big deal. It will bring in much larger check sizes from much larger players over time. So yes, for this cycle. In terms of cycles, unless the US government manages to pay off all its debt in one go, we're in this cycle. It's been the same repeating 4-year cycle. It's driven by the debt refinance cycle. It's a global cycle. There is no way around that because of the aging population and the debts that we have. So the only thing is, will this cycle morph it somewhat? Of course, they all do. Like the last cycle peaked really early. Why? Because the business cycle peaked early. In March 2021, the business cycle and liquidity peaked. When we go to 2017, liquidity in the business cycle peaked right at the back end of the year, and then it had a blow off top. 2013 was similar. So the last time around was actually the abnormality, and there's always going to be an abnormality. So what is the one most likely to happen this time? Well, if the crypto markets and liquidity peak when the business cycle peaks, and we'll use the ISM survey, the Institute of Supply Managers survey, as our proxy for that, we've only just bottomed and we're breaking 50 to the upside. And that's going to take several months or a year or so to get there. So probabilistically speaking, it might push it into 2026. So that's something we'd have to get our heads around, is actually it goes a bit longer than we imagined. So that's what I'm thinking about this cycle. Then we've got to think, okay, is the downside going to be the same? Because we've got new players, we've got ETFs, we've got different stuff. People can put Bitcoin in their 401k. And I would argue we probably have less downside. Bitcoin's downside has been less each cycle. So maybe it's down 50 or down 45 this cycle versus NASDAQ would be down 20, let's say. That would make sense. Now, a whole bunch of everything else will go down 99% or 95%. But what we'll see is the majors going down less than previous cycles. I think that's my most likely outcome. And so it can catch people off guard, because if people are waiting for the bottom of a cycle in 2026 and it's more of a sloppy sideways range and everyone's expecting it to go lower, you can end up having this whole mess where you're very bullish, but you don't own anything. So I think let's see how it plays out. But I think it'll always be different. I'm just trying to figure out where it's going to be different. It's definitely not going to be a short cycle because we've only just started the liquidity cycle. We've only just started the business cycle. So it won't be short. Will it be towards the back end of the year, which would be normal? Or could it be back into 2026? And then what does 26 look like? Maybe less frantic than the last cycle, which we saw a lot of collapses and a lot of things going horribly wrong.
Raoul discussed the possibilities of AI agents in the cryptocurrency market, claiming that they will need crypto payment rails to function. Because of their speed and cost-effectiveness, he believes Ethereum's Layer 2 solutions will suffice for payments. Powell emphasized that the usage of AI agents will result in a considerable rise in transactions, requiring a scalable and efficient payment system. Raoul stressed the significance of regulatory clarity for institutional investors in the Bitcoin market. He pointed out that by putting economic data, spending, and budgets on blockchain, they can be proven to be true. He believes that this will significantly boost openness and trust in the banking system. Regarding market cycles, he also warned that the present cycle may run longer than projected, possibly till 2026. Raoul believes Bitcoin's downside risk will be lower this cycle, with a 50% drop or less. Powell suggested that the inclusion of new participants, such as ETFs, and the potential to use Bitcoin in 401k plans could lessen the negative risk. Powell also emphasized the importance of capital markets opening up and money recycling, which would allow for fresh investments. He mentioned that traditional investors still don't have enough money to invest, and that additional financing may have to come from non-traditional sources. Powell believes that until regulatory certainty is obtained, institutional involvement will expand, resulting in continued expansion and use of Bitcoin and blockchain technologies. Furthermore, Powell stated that the current cycle is fueled by the debt refinance cycle, which is a global cycle influenced by the aging population and debt. He stated that the cycle may change over time, but the core drivers will remain constant. What do you think is the most significant impact that AI agents will have on the cryptocurrency market? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.